All right, guys, welcome back to the investing show. So many of you said, Simon, let's do some live trading. I'm learning this. It's kind of hard. Can we do this together? So let's do this. Let's do some trading live over the next half an hour. Let's look at the markets. Let's make some money in options by selling options. And then second part, let's look at which stocks are interesting right now and what's a buy and hold right now. Let's start with options. If you are new here, guys, this is what we do on the investing show. We are running a public portfolio so that it's easier for you to follow along and make some income selling options. We started with 50K. We want to get to 3 million. This public portfolio has now slightly over $1 million. Today we look at the income portfolio and compounding portfolio, and you can get everything live in the Sprint Club. The compounding portfolio has a few big positions, 9 positions right now, concentrated on purpose, and they are a huge position, around 10% each. The income portfolio is the opposite. It has small positions. It's selling cash secured puts, it's selling credit spread. We never buy options. We always sell them. We will sell a few today live. And it's the opposite. It's very small positions and we just hold them 14 days, 16 days on average. We always sell 45 days out, but we only keep them for 14 days, 16 days on average. You will see in a second. The income portfolio, right now it's making around $10,000 per month, so we're on track. Biggest month was 16,000. We started it this January with 25K. And the compounding portfolio is around 345,000 as of today. So we are on track also there. Make your plan, follow our plan, let's go. And today I took a screenshot because it's important that you visualize your own wealth creation estimate moving forward. So if you are growing your portfolio by 14% or 17%, visualize it so that you see where will it be in 20 years, 15 years, 10 years, 5 years, 3 years, and make a mark where you are. So this portfolio started 2012, and now we are at that, we just passed that 1 million mark, and we can see what is next. This is important. Why? Because there will be days like today where it's red and well, you lose maybe the confidence. And this is where you look at the long-term plan and get going again, right? So this is a tip from somebody who is in since 2012. So in the second part of this, we will look at the long-term portfolio. Who is on your defense team? Who is on your offense team? But right now, let's jump into options because we don't have any real alpha. Ayrton Senna said, we cannot pass 15 cars when the sun shines, but we can when it's raining. What does that mean? I don't try to have alpha. I don't have any alpha. I don't know anything that other people don't know. I'm not faster or smarter than the big hedge funds. So should I even compete with the big hedge funds? Actually not. Unless we don't need alpha because we have a probabilistic system. And this is the probabilistic system. We're going to do this live right here with you guys. So let's look at what's going on today in the markets. Future VIX is up 5%. That means fear. And futures are up. So that means fear is actually gonna come down over the next hours. We have AppLovin down 2%, Harvia down 2%, Amazon down 1.8%, Ferrari down almost 2%, Arista down 1%, DLO down 1%, Visa 0.1% up, Grab 0.1% up, FICO 0.4% up, Meli 0.8% up, CLAC 1.2% up, C Limited 3.8% up. And then let's look at things that we can trade today. We have Hood, Nvidia, Exxon, SoFi, Apple, AMD, Meta, Gold, John Deere, JP Morgan, TJX, Caterpillar, Tesla, and Google that I would like to trade with you guys. The first thing is we never buy options, we only sell them. And we always sell them 45 days out. I could tell you for hours why this is, and I did some videos about it. But basically, you're making the same yield for much less risk, and time is working for you, not against you, and you are the casino and not the gambler. Those are the most important rules here, okay? We will do this every Monday and we will stick to these rules. So let's look at today. What can we trade today? First thing, we want the highest volume. We want them very, very liquid, quick in, quick out. So no liquidity is no fun because you get stuck. You want to get out and you can't get out. So with a 50 million volume, I really like TSLL, which is Tesla, basically, leveraged Tesla ETF. IB rank 46, this looks really, really good. Nvidia looks good, but we will not trade Nvidia today because it has earnings coming up this week, and we avoid earnings. That brings just avoidable question marks in there. So today we'll trade Tesla. I'm not touching IBIT right now. SoFi, yeah, we could do SoFi December. So let's do Tesla December, SoFi December, Amazon December, and Google December. That looks good to me. And SPY, always a SPY. That's a great idea. So let's go to Tesla. If you're new to options, this is what we do. We go 46 days out in this case, because we always go for 45 days. In this case, we have 46 here. We want to sell a put at 0.30 delta. So the 0.30, let's go for the, this is TSLL, which is a leveraged Tesla ETF. Its price is $17. So we can make multiple contracts. We get per contract, if we go slightly below 30 delta, we get 1.27. So if we go for, let's say, 12 contracts here, we can get assigned between the ask, 170, and the bid, 1.3. So we could get a 1.5 fill 12 times. And I think that would be pretty cool. That's one thing on Tesla. So that's selling a Tesla put out January 2nd. And it's not Tesla, but it is TSLL, the leverage ETF on Tesla. 46 days out to January 2. Strike price is 15. And you pick how many contracts you do. The smaller, the better. Next up is Nvidia that we're avoiding today. So back to our watch list. Back to our watch list. Volume first. What's the highest liquidity after Tesla? It's IBIT. I don't touch IBIT today. I don't touch Nvidia today. SoFi is really cool. Let's go to SoFi. It's liquid. It doesn't have earnings coming up. We don't even have to look at the chart. We had some discussions, right? But Simon, you stopped charting. Yeah, because we don't need it. We don't need charting to make, what is it? 16,000 per month to have a win rate of 94.42%. So if we can have a win rate of 94% with just 10 minutes per day without charting, that tells me that I can save my time from charting, which is anyways very subjective. And let's do it without. It worked from January to now with a 94%. And I now just spent 10 minutes trading per day, which to me is the perfect time instead of, hours. So we had 254 winners, and 15 losers. We shared each and every trade live in the Sprint Club. And let me show to you right now. Today we closed DoorDash and made $1,200. We closed another put on DoorDash and made $2,500. We closed the ES, which is the E-mini, and made 49 bucks. And then we opened immediately the next ES, which is again selling a futures option on the S&P 500. It's the same as if you would sell a put on the S&P 500, but it is much more efficient because you're using less buying power to do the same thing. And then we sold the same thing on gold, but instead of the gold ETF, GLD, we went with the futures version of that because it's more efficient. So we have open right now PayPal, Amphenol, Uber, and HIMS. Those are sold puts. And we have closed DoorDash, and the S&P 500 in the futures version. And we made 1,200, 2,000. We made around $3,000 from that. Then we have some credit spreads going on. And the credit spreads that we have on right now are an Oracle bull spread. We have another Oracle, this time an Iron Condor, which is basically two spreads just on both sides. And then we have Meta credit spread, another Meta credit spreads, and Palantir. Palantir is very liquid, really cool. Actually, let's add Palantir to our watch list because I think it's not there. System is down. Okay. So let's go to our spreadsheet, which is never down. These are the credit spreads that we got on right now. These are the cash secured puts that we have on right now. And also one covered call because we got assigned DoorDash and then we were stuck. And so I'm selling on those 5 contracts, which is 500 shares of DoorDash. I'm selling calls right now to get rid of it again and to have it working. We don't want to hold these things very long. What is our average holding duration? Days held. The average is 12 right now, so it's getting shorter. We're holding things for 12 days on average. Oh, that's the wrong thing here. 12 days on average with a win rate of 94%. And we're sharing those things live in the Sprint Club. So if you're not in the Sprint Club and you want to get that, try it out. 7 days free. Afterwards, it's $49 a month. And you get all these live trading templates and also my moves live. You don't have to wait for next Monday when we go live again. So that's this week in trading. Now let's move to the compounding portfolio. The compounding portfolio, I wrote today about a few moves. So if you go to the investingshow.beehive.com, you find the Investing Show blog. I wrote today about a few opportunities out there. One, you will be surprised, is Visa. Oh my God, Simon, Visa, such a boring company. I agree. But sometimes boring is good because you want your portfolio to have a risk-adjusted return. So there are 2 ways of creating investor return. One is that you increase earnings. So let's say you own Amazon and Amazon automates more of its workflows, so it increases earnings. That's one way for investor to optimize returns. The other one is multiple expansions. Multiple expansion is, for example, price to earnings ratio. Multiple expansion and volatility, these are 2 ways for investor returns. On the risk side, you have to look about correlation. So if one of your assets goes down, do they all go down together? And so you have to make sure that you have a risk-adjusted low correlation. There is no zero correlation. They will be correlated. But you have to make sure in terms of risk management that your portfolio can weather both bear markets and bull markets for a compounding portfolio. So if we look at Visa, Visa is correlated to tech and is cyclical because it's correlated to the business cycle. But it has very low volatility, which in most portfolios, if they are tech heavy, like your portfolios are all very tech heavy. And if you decrease the volatility, that improves your Kelly criterion. And your Kelly criterion, together with the Sharpe ratio, this is what tells you the adaptability, the resilience of your portfolio overall. So I don't want to get too theoretical or too technical, but you can read it up here, The Investing Show. It's at theinvestingshow.beehive.com. And you can see why something boring like Visa could drive you 10 to 13% returns, while at the same time being recession resistant. So you want elements in your portfolio that are very defensive, and this is a defensive stock. And if you have a defensive stock that at the same time can give you 10 to 13% return, that's amazing actually. It sounds boring, but it's actually amazing because you have the defensive side covered, and at the same time, you are actually getting pretty good returns. So I made evaluation there, and you will find the scenarios. But the really important thing, and of course I compare it to the other options that we have, which is buying MasterCard. But what I really was surprised about when digging into their earnings and the catalysts is that 2026 will be a big sports year for the US. And Visa has contracts with the FIFA World Cup. And so I went through different sporting events and contracts that Visa has already. And I double checked with other sports events and how they lifted payments volume for Visa. So if you go through this article, you might get as bullish as I got about Visa, while at the same time, it's a defensive stock, which here would be on the left side, right, with our favorites, FICO, Harvia, and Ferrari. It would be a defensive stock, less correlated. Well, it's correlated to tech, and it's cyclical, but it's very defensive, and at the same time, it makes you possible 10 to 13% compound annual growth, which is pretty good for a defensive stock. And midfield, we have dLocal, Arista Networks, and Amazon. I wrote also pieces on them if you want to read them. And then we have offense, because of course, during a bull market, we want to outperform by far, because we're going to need those reserves when the bear markets come. So we're going to need cash positions, and they will come from outperforming in a bull market. And our current top picks that we're discussing are Mercado Libre, AppLovin, and C Limited. Let me know, guys, which of those you need more info about. If you want to see my live moves, join the Sprint Club. It's right here. Subscribe to the Investing Show if you want to see these every Monday. From next Monday, we will have Casey Stubbs and myself going through the live markets, trading live with you, answering your questions. So see you soon. Let me know what you need. And see you soon, guys. Keep rolling.
Avoid trying to do thousands of things that doesn't work. We have 274 templates for your business success. Reach your ambitious goals with one-on-one sprint coach. We double your revenue in 90 days.
What if your business would run well even when you are on vacation? Discover how 1,600 business owners have regained their freedom using the Strategy Sprint's blueprints. How they enjoy living their dream and watching their business scale. Get the exact checklists they use to go from stressed to fulfilled using the Strategy Sprints method. Order your copy of Strategy Sprints 12 Ways to Accelerate Growth for an Agile Business on Amazon today. And if you love it, leave us a review. For more information, head over to strategysprints.com.